Sound test. Hello, everyone, and welcome back to another session of EXP-Invest Presents Retail Traders Special Series. Today, we are here to talk about what is a safe way for beginners to start into the market. The name of the session is Skin in the Game. The reason why I chose this name is because if you are a beginner and if you want to start into the market, then the best way to do is to stay committed and to make sure that you keep learning continuously is by putting skin in the game. Now, I want to address the big issue of the wrong approach that is prevailing in India when it comes to starting your stock market journey. A lot of people start right away with the most ninja level trading techniques, that is options trading. That's not really a good approach. So, what do we do instead? Is it a good idea to start investing in the index funds? Should we do a mutual funds? Should we buy stocks directly or should we do futures trading? Let me tell you what you should do. If you've heard the name of ETFs or exchange traded funds, ETFs basically bring the best of both worlds, stocks as well as mutual funds. So the problem in mutual funds sometimes can be that your cost of operations can be, this problem gets resolved with ETFs because ETFs are low cost, they are liquid, and they operate on the basis of certain rules and regulations. Exchange traded funds are based on simple indices. So there are different indices, as you may know. There is the Nifty 50, there is the Nifty IT, there is Nifty Pharma. So these are all sectoral indices, and ETFs are based on them. So what you can do is you can do an SIP in ETFs. Now I'm going to share my screen and I'm going to show you the list of ETFs which I have found out are good for beginners to start SIP in. And then we will discuss the next strategy. So give me a moment. So here's the name of few of the ETFs which I have prepared for you. All the way from consumption-based index ETF to dividend opportunity ETF. There is also pharma-based ETF, auto sector-based, mid-cap 150 stocks based, of course, the Nifty Bs, which is an average of Nifty, gold ETF, banking stock ETF, junior ETF, public sector bank ETF, IT ETF, and infra. There are other ETFs also available in the market, and this screenshot, if you couldn't tell, is from the Zerodha account. So how do you go about purchasing ETFs? It's very simple. All you have to do is go in your watch list and search the word BEES. That is what you can see at the end, B's. So the Nippon India's ETFs list will show up in front of you. And depending on wherever you may be having conviction, or even if you have zero conviction at this stage, you can go forward with purchasing the Nifty 50, that is the Nifty B's ETF, and start your investing journey. So what you have to do is basically put some skin in the game. That is, put some amount of money so that your interest stays high. Now, why am I suggesting ETF investments or SIP even though I myself am a full-time trader? Because I need you to understand that to become a full-time trader in the year 2021, I started practicing in the stock market in the year 2012. That is right. That is how long it took me to first garner all the knowledge, do all the research, come up with a system, and then plunge into this. I know a lot of people out there have this dream of becoming full-time traders from day one itself. But the truth is that in between the stage, from ideation of becoming a full-time trader to actually becoming a full-time trader, it is a very long journey and it is a very hard journey. One thing that I always tell my members is that when you're coming to the stock market to trade and make money, you need to know that you are entering a very competitive game against some of the best minds in the world, and you are competing with real money. So obviously this is going to get very fierce. And if